It is Friday, October 16th, 2020. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was yet another non-virtual get your ass kicked at Jiu-Jitsu Friday. I actually did a little bit of ass kicking today, and kind of got my ass kicked, although he did not get me to a submission. But I did find my opponent to be very adept and very keen on defending himself. I'd wager so far as to suggest that he'd probably had just a teeny tiny bit of training before the COVID, and it's just now catching up to him now that, you know, he's able to get back to jiu-jitsu, that Sergio is finally coming back into it. Now, like I said, I felt like I had some competent resistance today. I don't know. I come to find out that I've had kind of an aloof disposition for a while, and it really doesn't communicate who I am. And one of the things that I caught myself today that I didn't catch myself soon enough, apparently, is that I don't tend to give as much feedback on rolls as my opponents do, and that's bad. I feel like I did Sergio a mild disservice for not communicating directly with him concerning the role that we had just engaged in. Although he was quite complimentary to me, and I appreciated that. But I don't know what it is. I'm part of the reason I even go to jiu-jitsu is the social contact. I live out here in the boonies, and so, and I don't work for other people. And so the amount of social contact that I get with people out here is relatively minimal. And I am a people person. So, it's one of those things where I like communicating with people. How I communicate with people is very important to me. How I present myself is important to me. And yet, I get in kind of habits like anybody else. And, out here in the boonies, ain't nobody to judge your hair or anything like that. And so when I go into town or I interact with people socially, a lot of times I find myself at a disadvantage in some sense, in that I'm either communicating at a different level or not as much as I would like with the people that I'm talking with. But anyway, as far as it went today, the biggest aggravation I had was not being able to get this one move right that we were doing in class today. It was a really interesting transition that I feel would have been much easier if my opponent actually had a gi jacket on. I guess that's one of those habits of training in a gi for 3 years that doesn't really go away, because there's parts of it where you're wanting to hold your opponent down or keep them in a compromised position, or keep their keep their posture broke, basically. And that's so much easier when you can just grab a hold of that collar, pull your elbow to your hip, and just hold it there. Because that motherfucker isn't going to go anywhere. If you do that right, that motherfucker isn't going anywhere. You got your abs on it, you got your back on it. He's not going to get out of there. He's going to have to struggle really, really, really fucking hard. And so, in the technique today, the part of the setup is getting your opponent in that rubber guard, and that's been a challenge for me just because the place that I was training before, we did not really concentrate on rubber guard all that much. I'll just be honest; it's not as pertinent to the Gracie system as it is the 10th Planet system. And again, it's one of those things that in the in the Gracie system, there's wrist grabs, there's sleeve grabs, there's collar grabs, there's lapel grabs, there's leg sleeve grabs. There's all kinds of places where you can grab your opponent that just aren't available to you in no-gi. And this isn't a disparagement on no-gi. It's that the only reason I really bring it up is because I'm very grip oriented. I like being able to keep my opponent in a compromised state. It's like if I break your posture, I want to keep your posture broken until I navigate around to the back or something to that effect. And so, I've just been having a lot of trouble with that. The no-gi stuff where I would normally have a grip that I just don't have in no-gi, and that's fine. It's obviously a deficiency that I'm going to have to learn to work through, because whether my opponent has a gi or not, I got to be able to deal with them. And it's like, you got to be able to play the cards that you have, not necessarily the cards that you want. And so, like, when I was rolling with Sergio today, I wasn't really going for submissions so much as trying to keep him from submitting me, and keeping him in a compromised or not so happy position. And I really screwed up, and then I almost had him in a good armbar setup, and I took it around to the back instead. And so, it was one of those things where I settled for something kind of compromised, because even though I was on his back, he was on his side. There's a lot of ways out if you get somebody on. If you can get to your side from somebody having your back, there's a lot of ways to get out of the situation from there. And although I think I just ended up letting him out. But, today's exercise for me as far as rolling was just getting back in the habit of rolling. Just getting back and forcing myself to get out there and put all this glorious jiu-jitsu that I'm learning to use. And that's been the biggest challenge for me to date, regardless of where I'm training. But I think at least part of my reluctance is a little bit of hurt. I mean, you get kind of close to people after training with them for a significant period of time, and then just to have several people that were basically my social center just dump me like that. That was kind of painful. And I didn't just lose them in jiu-jitsu. A lot of the people that I was rolling with there have since, decided to, not call me or shit like that. And so, that's their right. It's just that it feels like a bigger divorce. It's like I wasn't the one that made that decision. I wasn't the one that said your value systems are not aligned with ours. So it wasn't a decision that I made. But anyway, enough of that business. All told, I felt pretty secure today. I didn't gas out, and that was really, again, one of the things I was trying to pay the most attention to is just controlling my breath, pacing myself, and not going for anything too hard. And I think it's because I've been having I had the issue at the last place that I trained where I got a talking to because apparently I was training too hard. And so it's like, after that, you kind of get in a habit of just backing off and trying to at least explore the position that you're in and stuff. And so that's basically what I did today. Is I was just timing myself, and I was trying to keep every position that my opponent put me in, at least, like, from the get-go, I am trying to get them to put me in a position, but he put me in a triangle position, but I had it compromised from the get-go, because before he even got his legs together behind my back, I had a hand up on my chin. So he could have sat there and squeezed and squeezed and squeezed, and he actually did kind of squeeze and squeeze and squeeze. And as soon as I felt him relax, I just bumped that thigh up over my shoulder, over my head, and got around it. But that's basically what I concentrated on today, was just taking my time. Not being really eager, not being overly accelerated here. Not trying to explode into anything, just taking it easy. And like I said, I maintained a dominant position pretty much the entire time. I don't think there was ever a time that he was actually on top of me. Although I was in his guard a couple times, and I passed his guard relatively easily. I mean, but it was one of those things where I timed my way out. I didn't power my way out, and I think that was the biggest exercise for the day, was just concentrating on timing and trying to feel my opponent as opposed to trying to initiate everything. And although like I said, I found him very good on his defense. I was working on a Kimura at one point. I was working on I should have gone around for an arm bar, because at that point he was in a position where it seemed like I probably could have got away with it. I would have had to change my hand position, because I think I had him where I had reached through with my left hand and grabbed his wrist. And then I came up behind it with my right hand and was holding it in the same position. And that's how I managed to navigate him around to where I had his back. But as soon as I got my leg around him, he turned up on his side. And so, like I said, very good defensive move on his part. And kept him out of real big trouble. But nonetheless, I did manage to keep my legs around his waist and went from having his back to being in full mount. So it wasn't like he really won anything by getting me off of his back. But nonetheless, like I said, he was very good at defending himself. I came really close to a Kimura at one point. I was almost navigating around for an Americana at one point. But I think if I'd have put a little more effort towards isolating his arm, that I could have secured that Americana, because there was one thing I noticed is his Oompas were relatively weak. And Oompas, that's like one of those things. If you can get a good Oompa, you can typically get out of any position with somebody who's on top of you. Until they get you around to like S-mount and stuff, then it gets a little tougher. But anyway, so like I said, I stayed in a relatively dominant position, and I was inching my hand up under his elbow to try and get it around to a Kimura, but he caught that, and he brought his elbow in and snuck it back around my arm. And so, good on him that he managed to do that. I wish I was a little more on my game. That little arm navigation there is a setup for, again, an arm bar. But again, I've been dealing with so many injuries and whatnot, and plus lately I've been doing a little bit of work that requires me to be seated for long durations of time, and so I've been picking up a pound or two. And so, between that and injuries, my cut's finally healing up to the point where I feel like I can get back to rolling. But so far, I'm only going to do that with gi pants, because at that point, then I don't have to worry about my opponent grabbing my cut or anything like that. But all told, it was a good session. It was a good roll. And I probably could have gone one more, but at the moment, I'm actually trying to follow a recovery plan, and I don't know, I'm going to try and get in this weekend at least once. I heard somebody talking about some sort of Sunday class, but I've never seen anything on the schedule, so I always assume they're closed. I don't know, I'll have to check it out. But anyway, yeah, I think that I think I'm finally getting around to the point where I can actually get out there and roll. Had to happen sometime, right? Anyway, let's go ahead and throw down with some music. And you know we're going to go with Body Count because that's just what we do. But what song? You know, there was one, and I hadn't played it in a while. And I think that it's appropriate. Here it is. Talk shit, get shot, first dance. Here on Coin Metal. And that was Crowbar with Burn Your World. And so, as far as what we're going to get into today, I'm actually kind of rare on tabs. My system is performing much better, but that's because I did a full shutdown, did a little rinse and scrub in there, clean all the dust bunnies out of the nooks and crannies, and so yeah, I'm getting a little better performance. But I did manage to find a couple tabs in the interim, and we'll just go into them and see what happens. We got this first one here. It's on CoinDesk.com. Money Reimagined: How Ethereum 2.0's lockup will drive DeFi innovation. And this is authored on October 16th, 2020 at 15:10 UTC. And let's see who it was authored by. It's by Michael J. Casey. So yes, penis. The summer of DeFi might be over, but a looming event will give DeFi engineers a great incentive to crank up their, quote, Lego innovation model and build more decentralized finance products. The Ethereum 2.0 upgrade, see CoinDesk's explainer here, and we may. With thousands of Ethereum 2.0 validators expected to stash more than 500,000 Ether in a restrictive multi-year lockup, there will be significant demand for a creative solution that unlocks the value of those funds without undermining the upgrade mission. DeFi innovators will be happy to oblige. It's a process of demand and supply that's similar to how Wall Street's, quote, engineers respond with new financial instruments when rules imposed on traditional markets put constraints on investors. It matters not that the behavior constraining rules are imposed by a government regulator or, in the Ethereum 2.0 case, by a protocol. Constraints create an incentive for financial creativity. Also, as with many Wall Street inventions, this one will create an interesting byproduct. As markets arise in the new instruments, their price signals will indicate how people think this massive Ethereum protocol change is performing. The lockup. As discussed during CoinDesk's Invest Ethereum Economy Conference this past Wednesday, Phase 0 of Ethereum's migration to a proof-of-stake blockchain involves having 16,384 validators each commit to place 32 Ethereum in a soon-to-be-announced deposit contract. Those tokens will then be staked to secure and govern a new parallel Ethereum blockchain known as Beacon, which will function as a live environment for testing the proof-of-stake system to which all of Ethereum will eventually migrate. The key point is that the locked Ethereum cannot be sent back to the original Ethereum blockchain and cannot be accessed until the two systems are merged and the duplicate Ethereum on the legacy chain destroyed. The current timeline for the lockup is 18 months, but given how long it has taken for the first phases of Ethereum 2.0 to start, it could well take much longer. This transition is going to be difficult, not just technically, but economically, with its biggest challenge being how to manage incentives so that everyone else moves their Ethereum out of the legacy proof-of-work chain into the new one. Those decisions can be affected by a host of unknown variables. It's one reason why it's hard to argue with Radix CEO Piers Ridyard, who talked during one panel discussion Wednesday of Ethereum 2.0's epic complexity. So there's much at stake, quite literally, for the validators involved in Beacon. And while the total amount locked, worth $198 million based on current Ether prices, is less than 0.5% of Ethereum's total $42 billion market capitalization, these particular funds matter. By definition, these are high-energy funds. They are held by true believers in the Ethereum mission who are actively interested in how it evolves, not by casual Ethereum investors. They are precisely the kinds of people who will be open to innovative solutions on how to unlock their value. Given what we know about DeFi innovators, given what we know about how DeFi innovators use oracles and smart contracts to create new assets like wrapped or tokenized Bitcoin, taking value created in one chain and use it as collateral in another, it's a solid bet that new tokenizing contracts will be used to bring liquidity to all the otherwise locked Ether. They'll be bought and sold as tokens, but also used as collateral in DeFi lending markets. Ethereum 2.0 bonds. The locked Ethereum presents a contract that promises a set of contingent future cash flows with properties akin to certain types of bonds. In fact, that is what DeFiers will create, tokenized Ethereum 2.0 bonds. By transferring a token created by a fully collateralized smart contract to a creditor, validators can receive funds in unlocked original Ether and, in return, promise that when the blockchain merger happens and the lockup ends, the creditor will automatically receive the original 32 Ethereum plus the accumulated staking rewards. A little incentive there. Based on the staking reward projections built into the system's monetary supply, these, quote, bonds would earn a 20% yield on an annualized basis and then fall according to a sliding scale as the total amount of staked grows. What is not known is the precise date at which the funds will be unlocked, or the value of the Ether in dollar terms, at that time. Both are somewhat dependent on how well and how efficiently Ethereum developers progress toward the goal of a fully integrated Ethereum 2.0 transition. You'll notice they left out miners. But they are also dependent on whether, all things considered, the broader Ethereum community thinks the migration to the new proof-of-stake system is worth it. Hey, he mentioned the miners in a colloquial way here, but the fact of the matter is that so far they have seen like zero enthusiasm with the idea of transitioning over to Ethereum 2.0. And we've seen, like, I don't know, at least 6 major attempts to push them over to proof of stake. But it's like, hey man, my miners are proof of work. How are they going to become proof of stake and maintain my current market position? Answer that one. What we could see then is the market prices for tokenized locked Ethereum bonds becoming, in effect, an assessment of how well these prices are coming, or these pieces are coming together. Whether it creates a positive feedback loop that gives developers a real-time settlement signal to help them gauge whether the market thinks they are on target to achieve their goals, or whether it creates misaligned incentives to rush through upgrades that aren't yet ready, remains to be seen. Quote, what we could see then is the market prices for tokenized locked Ethereum bonds becoming, in effect, an assessment of how well these pieces are coming together. It's a quote of their own quote. Lovely. For the rest of us, this live market in Ethereum 2 futures will provide a great talking point and measuring stick. It's not like products such as the CME Group's federal funds futures, which before interest rates became anchored at near zero, functioned as a gauge of market expectations for the Federal Reserve's monetary policy decisions. Another is the TIPS break-even inflation rate, whose correlations with Bitcoin we discussed 2 weeks ago. That metric takes the differential between yields on regular Treasury bonds and those on Treasury inflated protected securities, TIPS, whose payments are tied to the Consumer Price Index as a market-based measure of people's expectations for inflation. In both cases, the financial engineering behind the product was initially meant to give investors protection against an event that's contingent on a policy constraint, but the product evolved into a valuable economic indicator in its own right. This Ethereum 2.0 process is going to be fascinating, betting on uncertainty. We talk a lot about the cases for Bitcoin as a uncorrelated hedge against a future political meltdown in the global economic system. That story is enhanced by concerns that the next month's high-stakes U.S. presidential election could be fraught with tension. With long delays expected and a vote count skewed by mail-in ballots, and with President Trump continuing to suggest that he might contest the result, many are questioning whether democracy itself is on the ballot this year. You know what? Trump talks a game because, he wants to be president and shit. But if it were obvious that he wasn't winning, I don't think he would contest it. Anyway, continuing on. And yet, for now at least, perhaps until there is an actual break in the prevailing system, it seems Bitcoin won't likely trade directly against election results, but rather track the election-driven performance of equities with which it has been correlated over recent months. If you want to look at how investors are betting on the prospect of turmoil, look instead to the options market, where the derivatives can pay out in the event markets become more volatile to the upside, downside, or both. And there, as Wall Street Journal reported last Friday, we are seeing, quote, bets go beyond the Wall Street hedging that typically precedes an election. One classic indicator found in the chart provided in that article shows how futures contracts on the CBOE Volatility Index, or VIX, whose payout to investors is based on the extent of futures swings in the S&P 500 index, are priced in terms of the month in which those contracts expire. What's notable is not just the predictable spike in the November VIX contract's price, but also how it takes some time for the later dated contracts to ease in price. Bumpy times lie ahead. Global Town Hall. Nervous Germans. Speaking of election expectations, YouGov's recent survey of the European Union opinion is worth reflecting on. The world's confidence in the U.S. has ramifications for the dollar's sustainability as the world's reserve currency, among other issues, and it's produced some striking, nay, alarming results. In a survey covering Germany, France, Britain, Sweden, Denmark, Italy, and Spain, the percentage of respondents who said they believed the U.S. elections would be completely free and fair ranged from 2% to 11%, while those who believed they would be mostly free and fair were spread at 27 to 37% range. No country, it seems, had more than 50% of respondents expressing confidence the election would respect the norms of democracy. We're not a democracy, we're a republic. In Germany, whose history naturally creates a wariness of power abuse, a meager 25% believed U.S. elections would be either completely fair or mostly free and fair. Whatever. It's well known that Europeans tend to hold an especially negative view of President Trump, which could skew the data away from a more dispassionate understanding of the workings of American democracy and whether to trust it. Yeah, we don't have a democracy, we have a republic. Even so, these numbers are a wake-up call, especially for people like us who are interested in the future of money. American currency hegemony is founded on the international faith in its leadership of the global capitalist system, which is founded in principles of market democracy. No. Democracy doesn't come into it, kid. It's who has the money. Within that, there is a basic understanding the U.S. political system will continue to enable a peaceful, trusted transfer of power as it has generally achieved throughout the 76 years in which the dollar has been the world's reserve currency. Anytime I warn of the end of the dollar's reign, I inevitably attract naysayers who point out there is no likely successor and, by extension, argue the current system will keep muddling along regardless of whether the rest of the world trusts America or not. And that I believe that's true. That may be true, but it assumes the only way forward is for the current monolithic system to be replaced by another monolithic system, as happened when the dollar replaced the British pound as the world's reserve currency. But that need not be the case. A multi-currency world is quite possible, especially when you take into account how blockchain and digital asset technology is fostering a proliferation of new alternatives, whether issued by central banks, China's digital yuan, companies, Libra, or decentralized communities, Bitcoin. The more those alternatives mature, the more significant a breakdown in international trust in the U.S. matters as a potential catalyst for change. Canada in a hurry. Reports from a Canadian virtual event on Thursday suggest the Bank of Canada wants to speed up its adoption of a digital currency. BOC Deputy Governor Timothy Lane believes COVID-19 will accelerate the release of a central bank digital currency. Yeah, I'm sure that's exactly what he believes, but the imposition of the Green New Deal is failing pretty much everywhere, so yeah, fuck you, it's not going to happen. Timothy Lane believes a shift in, quote, spending habits triggered the pandemic, coupled with the speed of technological developments, has narrowed the window to deliver a digital currency issued by the central bank, the CBDC reported Lane is saying. It's the latest in a palpable advance for central bank digital currencies, with many central banks and government officials now weighing in on this topic. The European Central Bank has upped its rhetoric, and last week, U.S. Treasury Department sounded more interested in the idea. It wasn't exactly a huge statement when Deputy Treasury Secretary Justin Muzinich told an Atlantic Council event last week a CBDC was something we're studying. But it was a significant signal from a department that has been reluctant to show its hand on this issue. Is COVID-19 really the catalyst? Might it be that China is marching ahead at a pace that no one expected? See relevant roads below. There is nothing like competition and geopolitical challenges to stir governments into action. Expect all this talk to get louder in Western countries. Relevant reads, nearly 2 million sign up for China's digital yuan lottery. When China wants to run a live test of a new idea, it has the convenience of being able to sign up a massive number of people and still treat it as a small, low-risk portion of its 1.3 billion person population. Even so, the huge airdrop of China's new digital currency into Shenzhen, reported here by CoinDesk's Sebastian Sinclair, is a major development. China's digital currency electronic payments is live. Much will be learned from this, though it's not clear how much of that information will be shared with the outside world. Trump's security hawks called distributed ledgers, quote, critical in U.S.-China tech arms race. Finally, it seems the U.S. government has noticed China is barreling ahead with blockchain technology. In this report from CoinDesk's Danny Nelson, we learned that President Trump's National Security Council has included digital ledger technology in its critical and emerging technology shortlist for the purposes of maintaining U.S. supremacy over China. Is a war using weaponized, state-controlled private blockchains in the offing? No, and you know what? This has stopped feeling like an article. This is like just a whole bunch of shit being mentioned. But yeah, so, all told in this article, the thing about CBDCs, and they still haven't faced this in a real sense. I mean, I think that people will take the airdrops, but the thing is what they actually dedicate the funds to. And the whole interest in CBDCs is the idea of being able to control the entire economy via the flow of the money. And that idea is very appealing. And it's much more possible with physical currency than it is with digital currency. And I know that sounds kind of silly, but it's true. But the problem with that is that because you don't have to physically store the money, you don't have to have a big-ass safe with 30 different currencies in it to be able to deal with your everyday shopping. You can have a multi-wallet. You can have multiple wallets on one device. You can have multiple wallets on multiple devices. It doesn't matter. But the point being is that you have that capability now, and because of that, there is no way to stop you from transacting with other people outside of these systems that they're wanting to create, the CBDCs. Anything happening outside their networks is inaccessible to them. I mean, they might be able to analyze it and say, oh, hey, somebody did a transaction in Verge or Litecoin or Monero or Bitcoin. But they can't do anything about it. For all they know, the buyer is nowhere. I mean, the person that's doing the transaction isn't the buyer and it isn't the seller, but it's a proxy acting on behalf of both entities, who is not in physical proximity to them, not even in the same country. With those capabilities being possible, the idea that you are going to limit people's economic activity to solely your CBDC, it's fucking bullshit. Just pipe dream. Put it down. Get over it. That idea might have been possible back in 1995 when we didn't have any choice, and you could have transitioned just straight over to Visa cards that we used to buy and sell everything. but you would have had to have gotten rid of the dollar. And see, the problem with the United States and the idea of getting rid of the dollar is that the dollar is actually a measurement of weight. It's a measurement of weight in gold and in silver too. You can, when we got under the under the situation where we're able to, I don't remember the act or whatever, but it allowed them to back dollars with silver. But the point being is that the system that they were working with back then, you would have been able to transition it again straight over to Visa, ban US dollars or whatever. But there again, you'd run into that issue of the dollar is a measurement of weight. It's not, and it's associated directly in our I want to say it's in the Constitution or one of the bills or one of the acts or something that makes the U.S. dollar the official currency of the United States. And so, again, because the dollar is a weight, it's not an actual, it's not just the name of the currency. You know, there's a weight associated with it. But yeah, I don't think even if they do a CBDC, I don't think we're going to get rid of the dollar. I think that we will see a vast appreciation in cryptocurrencies, at least against the U.S. dollar. But the other problem that bankers face with regard to the CBDC is among the least trusted people on the planet are bankers. I mean, they're right up above criminals because the word criminal is ill-defined. You know, I mean, banker, they wave the magic wand and create money out of nothing. You know, borrowing against your potential capability or your great-grandchildren's potential economic capability, you know, to generate economic value. And, you know, I don't know. I keep losing my train of thought on that. It's like I think it's because it's so beyond consideration at this point. I mean, these discussions meant something like maybe back in like 2012 at the latest. You know, before Bitcoin really got going. You know, I mean, it was more than enough time to look back on 2007, 2008. Realize exactly what happened, and having rectified the situation, be able to get up and move on. But nobody went to jail, or hardly anybody went to jail. No real lessons were learned, and we find the Federal Reserve and the U.S. Treasury engaging in a lot of the same policies in the lead up to the housing crisis. So, you know, it's one of those things where we haven't really learned a lesson because we weren't forced to learn a lesson. You know, I mean, what was the big lesson that we learned? If we fuck up bad enough, the Federal Reserve will allow us to borrow trillions of dollars against our future capability to produce anything. I mean, what a great deal. What a wonderful lesson we learned there. That banks are willing to loan us money. You know, that those payments do come due, though. You know, we do have to pay that back. It's not something that we can just like put off in perpetuity. But yeah, that's probably another reason why we're not going to see the dollar go away anytime soon. Just because there's so much of it in circulation, and it's valuable to the bankers who would be managing any CBDC project. And again, who aren't all that favorable amongst people. I mean, really, you have to work up global disdain in order to sustain a network such as Bitcoin's. You have to create enough people that hate your fucking guts and don't want to transact in your currency anymore to maintain a network. And that was achieved back in 2009. So, yeah. Gives you an idea of where we're really at, right? Anyway, let's go ahead and throw back down with some music. And as far as where to go next, I don't think we played any Megadeth last time. Let's try and rectify that. Here we go. Killing is my business, and business is good. Here on Coin Metal. And that was Fear Factory with Default Judgment. And so, as far as next up, got this thing here. It's on AsiaTimes.com. Wall of Money will send Bitcoin to 1 million. And this is by Paul Muir, and it was authored October 17th, 2020. So apparently he's from the future. Bitcoin, oh, and let's see, who is this by? Yeah, Paul Muir, so yes, penis. Bitcoin will soar to a mind-boggling $1 million by 2025, predicts Real Vision founder and CEO Raoul Pal. In an interview with Stansberry Research, a former Goldman Sachs hedge fund manager said, quote, an enormous wall of money will flow into the leading crypto over the next half-decade. He told host Danielia Cambone, quote, I think it's going to be not because the world's collapsing, it's because there's going to be adoption by real large pools of capital. We're going to go through 2 of these halving cycles, and just from what I know from all of the institutions, all of the people I speak to, there's an enormous wall of money coming into this. It's an enormous wall of money, just the pipes aren't there to allow people to do it yet, and that's coming. But it's on everyone's radar screen, and there are a lot of smart people working on it. Yeah, I think you're full of shit. Bitcoin's third halving cycle began May 2020 and will continue for about 4 years. If Bitcoin's price action mirrors that of past halvings, it will dramatically rise in value. In the last cycle, it soared from 1,000 to 20,000 before sharply correcting. Its price at the time of writing, 12:10 a.m. Hong Kong, was $11,332 according to CoinMarketCap. As Asia Times recently reported, Paul's, quote, wall of money appears to be flowing in already. MicroStrategy, Square, and Stone Ridge have invested $425 million, $50 million, and $115 million respectively. MicroStrategy founder Michael Saylor recently said business intelligence software firm's move was just the beginning of a massive corporate shift into Bitcoin as a store of value as uncertainty over the future of the US dollar grows. Gold loses its shine. Paul said he was so confident that Bitcoin is, as legendary Wall Street investor Paul Tudor Jones described it, quote, the fastest horse in the race, that he was seriously considering converting his gold to what senior Bloomberg analyst Mike McGlone believes is the digital version of the precious metal. There is no such thing. He said, quote, when you get into the macro opportunity, when it's all happening, Bitcoin starts breaking out of these patterns that it's been forming. It is going to massively outperform gold. I'm 100% sure of that. In which case, why would I have a gold allocation? Because you're smart, that's why. MicroStrategy's Saylor recently expressed it even more strongly. Quote, Bitcoin isn't 10 times better than gold. It's 100 times, maybe 1,000 times better than gold. No, I wouldn't go that far. Supply shock. Crypto YouTuber Lark Davis believes Paul's projection is highly optimistic, but reasonable. Quote, he may just be right. A trickle of institutional money coming into the market is about to turn into a flood. So much so that miners are going to be unable to keep up with demand. In fact, they are already not able to keep up with demand. In fact, a big supply shock may be looming for Bitcoin. Yeah. That's really interesting, though. This part here. And it shows a complete lack of understanding of Bitcoin. Here. Let's see here. Quote, he may just be right. A trickle of institutional money coming into the market is about to turn into a flood. So much so that miners are going to be unable to keep up with demand. In fact, they are already not able to keep up with demand. In fact, a big supply shock may be looming for Bitcoin. No, wrong. It doesn't work that way, asshole. The way it works is they mine for 10 minutes, they hit the block end, the one miner that got there first gets the block reward, and then more Bitcoin are issued. And as a matter of fact, I think it's 6.25 Bitcoin are issued, or it might be 6.5. I'm not sure. Anyway, or 5.5, or I'm pretty sure it's 6.5. Or 6.25, because it was 12.5. It went from 25 or 50 to 25 to 25 to 12.5 to 6.25 now. Or I don't know. I'd have to think about that a little bit. But anyway, point being is that they're deterministically issued. There is no supply glut or demand or no, that doesn't exist. If it does exist, it's in, like, the demand for it would be indicated in people willing to pay more US dollars for Bitcoin. That is the demand. It doesn't go up in supply just because there's more demand for it. You can't just put more miners to it and expect that you're always going to get more Bitcoin. I mean, you may get more Bitcoin, just because you're putting more effort toward it, but it's not in terms of like manufacturing where, you put more manufacturing to it or more machines to it and you get more out at the end because you've increased your manufacturing capacity. With Bitcoin, for every 10-minute cycle, that they're mining, there's only going to be one block reward. It doesn't create 2 block rewards just because you put up another fucking hash farm. And so these Wall Street people tend to think like that because that's how you do supply and demand. That's how supply and demand works on a manufacturing line. Or in a market related to what's coming off of that manufacturing line. And so, the idea of Bitcoin going up to $1 million, yeah, it will go up to $1 million if the demand goes up for it. Because people will be willing to pay more for it. And this has always been a prediction, but the thing is this, like, how long is it going to stay at $1 million per Bitcoin? How long is it going to stay there? Probably not all that long. It'll probably go right back down to $500,000 per Bitcoin. I mean, that'll be high enough, but the point being that Bitcoin is parabolic for a number of reasons, not the least of which being market manipulation with regard to the price of the dollar in Bitcoin. And that sounds kind of funny until you consider that stable coins that aren't necessarily backed by any US dollars are circulating in the market in the stead of US dollars. And this is how they are able to snatch some of Bitcoin's quote-unquote volatility, same thing with altcoins, on the arbitrage, But I've gone through that scenario a million times, and I'm not gonna continue to do it. But yeah, so the let's see, did we go into this one? Oh yeah, this thing. I wanted to touch on this one. Oh, Bitcoin is set to become digital gold. Yeah, that's no. See, another problem with putting it in those terms is that with gold, if you start mining another mine, then you get more gold out. With Bitcoin, if you start up another mining farm, you'll get more Bitcoin out, but not because you've increased the number of Bitcoin that will ever exist, or because you pulled more than there was possibly going to be that day, but simply because you're out competing the other miners on the network. You're competing for a fixed sum of Bitcoin. You know, it's not something where you put more miners to it and so more gold comes out at the end of the day. No, I think I can't remember what the total block issuance is per day, but that's pretty much it. It's going to be that. There are those few times when the difficulty is too low for some reason, and the miners get ahead of the curve, where they're bouncing out blocks every 5 minutes instead of every 10 minutes. But typically the process is once every 10 minutes they get to the end of the block reward is issued, and more coins are issued. You know, if they ever get to a point where they're like mining way ahead, you know, to like 2-minute blocks or some shit like that, it's not really going to make a difference, except that we're going to run out of coins faster. It'll move the halvening up a day or two, maybe a week, maybe even a year. You know, if they get good enough at it, if they're maintaining that kind of lead over the network for that long, and that is the challenge, because in the meantime, everybody is incentivized to catch up to you and kick your ass. This is a race. This is one of the reasons why I say that Bitcoin and cryptocurrencies, mineable cryptocurrencies, are basically going to replace warfare. They're going to replace the current economic system that we've got to some extent. I think to some extent the SWIFT system and the current banking system will continue to exist because we do have our national fiat currencies. It's just they will be competing amongst altcoins, ICOs, DeFi projects. You know, it's just a bigger screen of competitors now. That's all. And of course, the barrier for entry to these markets is no longer in existence. It's who has enough balls to step forward. I mean, that defines your level of involvement, or how much deference you should be paid. But yeah, so I saw that reference in the previous article to something about a digital gold thing, and that's just bullshit. Yeah, Bloomberg analyst Mike McGlone believes the digital version of the precious metal. The idea of converting Bitcoin, gold over to Bitcoin, that's just exchanging one commodity for another. You know, and that's perfectly fine. You know, if you think you're going to get a higher return on one than the other, then it's a perfectly prudent move to do so. However, you do have to keep in mind the various characteristics of all of your commodities in your portfolio, or assets in your portfolio. And see, personally, I believe that gold and Bitcoin are two entirely separate classes of commodities or assets. Now, it's not to suggest that, you know, you're not hedging yourself if you don't have one or the other. It's just that by having both, you increase your hedging capabilities that much more. And as far as gold goes, I don't recommend anything other than physical. I mean, because you have to trust the issuer of the security or the certificate actually has access to the gold, actually can and does intend to redeem your certificate for physical gold at some point or another. It's better to just have the physical gold. You can freely exchange it. You don't have to worry about, is the market valid? Is the token supply actually matching the gold supply that it's supposedly backing it? You don't have to worry about any of that crap. You have it in your hand. It's an ounce. That you could go to a bursar or a collector or just somebody else that's into gold who has the money and is willing to buy your gold and sell them your gold. No third party needed. Bitcoin is the same way, except you can do it digitally. And you don't need a safe to keep your gold bar in until you sell it and keep the money in after you've sold it. But anyway, so the next thing I got up here is on CoinDesk, RAC on the first truly free markets for music and culture. I think this might be a little bit interesting. Might actually pertain to me. And this is by Nathaniel Whitmore, Whitmore, authored October 16th, 2020. Grammy-winning recording artist RAC explores the business of music and how crypto experiments could shift the balance of power. And we didn't actually click on that. Or no, I did. Different one. Here we go. RAC explores business power from what? Oh, never mind. It's a fucking talk. I was hoping it was an article that we could actually read. Unfortunately, not. But yeah, so gold, have it. Keep it. If you have it, keep it. Yeah, it looks like I'm done for articles at the moment. So let's go ahead and bump back down to music. And on the other side of that, I might actually have something to read. But where to go with music? That's the question. We've done that, we've done that. We haven't done any Motorhead. Yeah, why not? Ace of Spades by Motorhead here on Coin Metal. And that was Skindred with Nobody. And so, I did a little digging around, and I happened to find a couple that I think will suit us for this evening. And this first one's on BitcoinMagazine.com. New Civil Liberties Alliance challenges IRS collection of private crypto investment data. And this is by Alex Wilson, October 16th, 2020. So yes, penis. If you're a Bitcoin trader or investor, you've probably traded on multiple cryptocurrency exchanges and, for the most part, trusted that those exchanges are keeping your data secure from unlawful data collection, just like a bank or a credit card provider would. Unfortunately, that doesn't seem to be the case. On July 15th, 2020, tax day this year, New Civil Liberties Alliance, NCLA, filed a lawsuit on behalf of James Harper against the IRS, challenging the agency's unlawful collection of private cryptocurrency information. Harper decided to take this action against the IRS after he received a letter from the agency in August of 2019 as part of its ongoing effort to alert taxpayers about crypto tax filing requirements. Harper wants to hold the IRS accountable for violating his privacy and identifying him as a cryptocurrency holder. According to a case summary, NCLA represents Mr. Harper before the United States District Court for the District of New Hampshire. Mr. Harper's crime: holding a Bitcoin wallet. The lawsuit argues that the IRS has acquired the unbridled power to demand and seize Americans' private financial information from third parties without any judicial process, in defiance of the Fourth and Fifth Amendments and statutory protections. Some of you reading may even know Mr. Harper. He bought his first Bitcoin in 2013 and has been an active member of the community ever since. According to the case, he has always paid his applicable taxes and reported his Bitcoin trades. Like many of you reading, Harper used a few different cryptocurrency exchanges to conduct his trades, all of which contractually promised to protect his private information. Last year, Harper became one of 10,000 crypto holders to suddenly receive a letter from the IRS stating that it had obtained his financial records from the cryptocurrency exchanges without any particular suspicions of wrongdoing. Additionally, the IRS failed to meet its statutory duty to give Harper advance notice and an opportunity to challenge the seizing of his crypto data. I'm not a lawyer, but that doesn't sound like something the IRS should be able to do. I thought the government needed a subpoena to obtain private information. Is it able to obtain any data it wants without a warrant? So, what does a lawyer on the case think of this? Quote, "There's no IRS exemption to the Bill of Rights," A.D. Dinar, a member of the litigation counsel, told me. Quote, "The people who own cryptocurrency do not thereby give up their right to secure the privacy of their private financial information. No federal official should obtain private financial information without giving its owner adequate notice and opportunity to contest, especially when the federal official has not obtained a valid subpoena or warrant from a court. Otherwise, it is a short, slippery slope into an unfettered surveillance state." When I sign up for a cryptocurrency exchange account or any other service with a third party that contains private information and is contractually obligated to protect my private information, that is exactly what I expect that third party to do. It's frightening to see the third party and government sidestepping our contractual rights and law. This makes me wonder what other information is being collected by government agencies without a warrant. Unfortunately, it seems like we're much further down the path of a surveillance state than most realize. I hope that the NCLA's lawsuit will right this wrong and protect people from unlawful searches and seizures in the future. Given NCLA's close alignment with the cryptocurrency community, it has recently started to accept cryptocurrency to help fund this case. Your donation of Bitcoin or other cryptocurrency to the New Civil Liberties Alliance is one of the most tax-efficient ways to stop government overreach. Learn more and support it in its case against the IRS here, and it gives us a nice little link, which we're not going to click on, unfortunately, because we do not have money to give to them. But I wish them luck in this case, because I don't really believe that the IRS has any say or should be monitoring your cryptocurrency transactions at all. It's one of those things where they could be collecting the data and they could be observing the data and all that stuff. But the problem is this: they don't actually have a legitimate reason for doing so. Now, in the case of somebody who they are investigating for specific connections and specific reasons, they bust a drug dealer and their name comes up. And then, under subpoena, they investigate the guy they arrest's phone, and they find the phone number of a person, and then they get a subpoena for that person's phone records, and then that person's bank records. There's a process involved. They can't just collect everybody's fucking data and arbitrarily pick through it and say, I want to bust this guy. This guy's a dick. Fuck this guy. We're going to send him a letter. Send this woman a letter. Send this grandma a letter. They were too successful at trading, so, we got to punish them for that. And so, and it really does look like it's that arbitrary. Where they're verging on vindictive with their power to seize data. And so I think that they really need to be reined in, and hopefully this will lead to something like that. The fact of the matter is, I believe that the IRS and what's the other one? The SEC, the CFTC, all of these organizations, they don't really have any say over crypto. Not how it should be regulated, not how it should look, not how it should operate. That is up to the kids, and they're literally kids, involved in building and supporting these networks and these projects. And in all honesty, I think these organizations should treat cryptocurrencies like that. It doesn't matter if you make money on them. It doesn't matter if you make a higher profit than they intend for you to, or they don't get their cut. None of that shit matters. They need to prove that you are a criminal, that you are doing criminal shit with that money. They need to prove that you're a bad person, that you deserve to be punished. If you're just some grandma's trying to build up a little nest egg for your grandchildren, they shouldn't be punishing you for that. Maybe you're a little more savvy trader than the average out there. You happen to be appreciating in value, making a profit. The IRS should not be paying attention to you. Now maybe if you're taking funds from a Russian oligarch who's involved in some mafia scheme there, or some criminal activity, real criminal activity, like murders and extortions and human trafficking and shit like that, real crimes with real victims, stealing people's money, misappropriating other people's money. I mean, that's shit that if these entities, if the IRS, the CFTC, SEC, if they were to really be investigating the big banks out there, they would find more than enough criminal activity on their open books. Mostly misappropriating people's funds, borrowing against people's funds and documenting it on a different ledger, and no documentation of it elsewhere. Meaning that they're not letting the SEC know about it. Shell corporations that they own other companies and other banks through. All manner of fuckery and fraud out there. But no, they gotta prosecute people in crypto. And it's this uneven application of their mandate and those laws, and it appears vindictive, and to some extent it appears to be competition control for the legacy banking systems. And it's really unfortunate. I think in the longer term, it's just wasted effort. That in the longer term, we're going to end up using systems such as Bitcoin, coins such as Bitcoin, to circulate billions and trillions of dollars worth of monetary value all over the planet without the impediment of the IRS or any taxation or any real friction, certainly no real regulation. And it'll be because that's the cheapest and most honest way to do it. Because we're going to find out through these little nips at cryptocurrency, where they're suing this guy and they're prosecuting that guy. We're going to find out that those efforts are actually costing us way more in terms of our ability to compete with others, with other countries, and on the global scale. I mean, because none of this shit is restricted to existing within the United States. It can be anywhere. And the freer we allow it to be here in the United States, the more of it will be here in the United States. And the more open we are about it, or with it, the more transparent it will be. I mean, let kids invest in it, man. If they want to invest in shit, the shit coins or altcoins or whatever you want to call it, let them do it. They're going to learn the big lessons a lot earlier than you or your parents did. I mean, having been involved as long as I have, I can tell you there are kids out there right now in their 20s who have as much experience with regard to trading as a lot of the people were. If I were to walk into a JP Morgan branch somewhere, any one of those people there that's actually handling assets and executing trades, that person is tantamount to a 17-year-old with 2 years of cryptocurrency trading experience. That's what they've been reduced to in the global market. And it doesn't matter what country you go to. It's the same thing. If you got a 17-year-old that's been trading cryptocurrency since he was 15, he's got as much trading experience under his belt as any one of those people wearing ties and suits to fucking work every day who's executing trades for Goldman Sachs or JP Morgan or yeah. That's what's happened. That's the kind of paradigm shift we're dealing with. And the thing is that every single one of those kids is aware at a fundamental level of what their power is in the market. Where they're actually causing other people to trade because of the way that they're trading. And they see the way that they push the market, and they see the way the market pushes back. Again, we are going to have very, very savvy traders. By the time they're in their 30s or 40s, they're going to be creating their own cryptocurrencies by then. Because they will have had enough experience seeing how the current breed operates. And people act like that's something that's going to winnow down to just Bitcoin or some CBDC or something. No. I don't give a shit what's more efficient. You know what's most efficient? The system that you experience the least amount of friction on. And you might have to wait a little bit longer because it's transacting internationally. But if you can do it just as securely as a bank could on a completely open system and nobody could stop you from doing it, that's the one you're going to be doing your business with. That's going to be your transfer medium. Because it opens your market up the widest it could ever be and cuts the amount of friction that you have to account for in your commerce down the lowest. This is called efficiency. On any other fucking scale, it's called efficiency. And that is what it will be known for in cryptocurrency. I believe that in the longer term, what we are going to see is things like Dogecoin actually being used in everyday retail commerce. Because if the government or a bank can legally introduce to us as legal tender an alternative to our national fiat currencies that opens currencies up to the possibility of all global currencies participating in the same market, i.e. being able to be used interchangeably. If you can come to an exchange rate that you can agree to and that you will actually execute on with your partner in commerce, the business can happen, the retail can happen. The money can change hands and circulate into your local economy. And that's terrible. That's going to be terribly important going forward. You know, these analysts, they talk about cash crunches and stuff like that. When you have alternatives like Monero or Doge, that whether or not those fiat currency systems are operating, as long as somebody is willing to mine them, that they will be there. That'll be what people use. And you know, there's been, you know, this big desire to push us all onto a currency that can be transacted via some fucking riffit in your hand, and that's where your wallet is. And you know, that sounds like something I might have read or heard about, you know, Mark of the Beast, that kind of thing. I hate sounding like Alex Jones, but he's a guy who said it first. It doesn't mean that the idea isn't real. It doesn't mean that isn't on somebody's roadmap. And I mean, we've read enough about projects like that here on this show to know that there are people that take those ideas very, very seriously and wish to impose it on billions of other people. Fortunately for us, choice exists, and how we go forward. If in fact we do ever end up on a system like that where you got some sort of riffit in your right hand and you fucking pay for everything and it's the key to your everything, and if we do that, it'll be because the market wants it. Not because some government imposed it on us, not because some bank mandated it, not because the IRS said it must happen. It'll be because you said, you know what, it'd be really interesting, and actually I think it'd be really easy, it'd make my life so much easier if I just had this riffit thing in my hand, and I could just like swipe it past stuff, and I can get in my car, and I can get my house, and yeah. Again, if the market wants it, that's what'll happen. You know, and at least part of this show, I try and make people aware of the fact that, you know, you could probably do some sort of hack workaround where you're simulating somebody's riffid and having copied their digital ID and whatnot. Just fucking scan into their house, scan into their car, scan into their bank account. So, you know, there are trade-offs. And unfortunately, I think the Mark of the Beast one, the trade-offs are just too high. Anyway, it is with that I'd like to bring this episode to a close. Thank you very much for listening. I certainly do appreciate the support. We will be back again on Monday at 8 p.m. Pacific Standard Time, and so until then, I want y'all to trade safe. Do your homework. Watch out for your own bunghole, because nobody else is going to do it for you. And so, as far as our last dance is concerned, as per normal, I've not picked one out. Got some Slipknot playing in the background, and you know, we haven't listened to any Slipknot tonight, so we're going to have to rectify that one. The question is, what song? Because some of them tend to be kind of long. Oh, yeah, that one's tempting. No, it's not tempting. Gosh, I wish I would have thought this one out a little better. Because like I said, there's a ton of good songs that that they've done. Unfortunately, a lot of them are really long. There's one in particular that I'm looking for, and if it's short enough, we're going to do it. Where the hell is it? Alright, it's not on this album. It's not on this album. It's not on this album. It's not on that one. I think it's on the first one. Or at least the first one that comes up. Here we go. Custer by Slipknot. Last Dance here on Coin Metal. Thank you again for listening, and y'all have an excellent weekend. Good night.